Hello and welcome. In this on-demand webinar, OJM Group partner Jason Odell outlines 4 opportunities for physicians to leverage today's historically low interest rates in their overall wealth planning. OJM Group partners are the authors of 12 books, including our newest books, Wealth Planning for the Modern Physician and Wealth Management Made Simple. To get your free print copy or ebook download, text OJM Web to 47177.
Thank you, Emily. I'm Jason Odell, Managing Partner at OJM Group, and I appreciate you taking a few minutes of your time to listen to our webinar today, which is going to cover 4 ways to leverage today's low interest rate in your wealth plan. And these 4 different ways, we're going to get into a little bit of detail on each of them and explain really how you can effectively use today's extraordinarily low interest rate environment. Mortgage rates, student loan and business loans. We're going to talk about a concept called premium financed life insurance, and we're going to get into discussing estate planning as well. So as we talk about mortgages and refinancing to lower interest rates, obviously that translates directly to business loans, student loan interest, and lower interest rates that we're in today. How premium financing can use other people's money to build tax-favored wealth long-term with locked-in ultra-low rates today. And then on the estate planning side, allowing flexibility in an estate plan by utilizing low interest rates today to lock into some loans between family members and or generations that potentially could be impactful for estate planning purposes for your families. So mortgages, historically low interest rates. You don't have to go very far to pick up the newspaper, listen to the news, watch any type of business channel. You're going to hear all about the low interest rates. We're historically low. So does it make sense to refinance to the 15-year or the 30-year fixed? Things you need to be concerned about: what are the closing costs? Are they charging any points on doing the refinancing? You also want to consider, if you're moving to a longer term loan, that you accelerate payments. So if you had a 15-year and you moved to a 30-year, that you pay more to have that loan paid off earlier rather than later. By refinancing to a longer rate, that gets you a lower interest rate potentially, also a lower payment, but keep the same payment plan as what we typically will recommend to our clients. You can see just by the chart here, going back to 1991, all the way through 2019, and even now for that matter, we've seen interest rates, at least mortgage rates, historically start to trend down, and trending down actually even below where they were in 2011 and 2012, as you can see on this graph. Refinancing business and student loans makes absolute sense right now. If you've got a business line out on a piece of commercial real estate, a surgery center, you should definitely look at the interest rate and determine whether or not it makes sense to finance. Is the bank you're currently with willing to refinance? If they're not, change banks. There's always a bank out there that potentially be willing to lower the rate that you're currently paying on it and do it in decent terms. Any business lines of credit, any equipment loans, any practice purchase loans. So if you were buying a practice and you financed it, you want to look back at that. Student loans, absolutely. If you have any student loans, you want to take a look at that and determine whether or not it makes sense to refinance those as well. Always taking into consideration, what are the terms, what are the, if any, prepayment penalties, because you want to be aware of those. You ideally refinance with no prepayment penalties. And again, if you go to a longer term rate, you want to make sure that you can, with a longer term rate, you pay more now so you can cut down that longer term if you're moving from a short term financing to a longer term finance to get a better interest rate. Also gives you a lot of flexibility in your payment plans. If you go to a longer term rate and a lower interest rate, if some months come up and there needs to be some times where you're not making that payment, you can lower, or you can go back to the required amount, which is less than, and then obviously, again, catch back up at the end. Just be aware of what are interest rates, what are terms, and can you, is there any prepayment penalty? Let's talk about premium financed life insurance, because really this is a tool that is making a lot of sense for a lot of physician clients around the United States. And what this is, and the concept is, premium financing involves involves a lender who lends funds to a person or company to cover the cost of an insurance premium payment. And current interest rates make for this to be unbelievably attractive. When those funds are borrowed, they're placed into a permanent life insurance policy. And that life insurance policy can be owned by an individual, by a trust, or by an entity. Fortunately, there are many states that have cash value life insurance as an exempt asset. It's protected for asset protection purposes, which is great. And life insurance cash values grow tax-free, can be withdrawn tax-free if properly structured. And the death benefit passes to the beneficiaries tax-free as well. So you've got significant benefits to utilizing this. Very low interest rates today to be able to borrow funds, to place them into a life insurance policy where the money is growing tax-free and can be withdrawn tax-free. So let's take a look at an example. If we have a male age 55 and he's going to borrow $500,000 a year for 5 years, that's $2.5 million that they're going to borrow from a lender. Lender's going to require collateral in this case, usually about 15% of the total amount of the monies that they're lending or that you're borrowing. And they're going to charge you an interest-only payment. And that interest-only is going to be a 15 years. In our example, we're showing a 15-year interest-only payment at 2.25%. And that totals $754,000 of interest over that 15-year period of time. And then what you're doing is you're taking money out of the life insurance policy to pay off the lender. And then you're going to take a tax-free distributions, in this example, from this individual's age 72 to 91. And they're going to pull $146,351 a year out tax-free during that period of time, or the equivalent of $2.9 million. If you were to just take the interest payments over 15 years, because that's your cost, and you were to invest as interest payments, that's $754,000, and started to take distributions at your age 72, you'd be able to take $1.2 million out of that account after you pay tax on that account and expenses. So the difference between the 2.9 in the life insurance and the 1.2 in the after-tax accounts are $1.7 million improvement. This is a significant improvement, and really it's for a couple reasons. Low interest rate that you're able to lock into, and the ability to have the money grow tax-free and come out tax-free are the reasons. In a picture example, what you'll see here is a lender is paying interest on, the lender is loaning the money to you, the client. Client is taking that $500,000 for 5 years and putting it into a life insurance policy. Client's paying interest over the 15 years. Client is then taking distributions from the life insurance policy after the proceeds inside the cash value life insurance in the 15th year are used to pay off the lender in this example. So you've got a lot of benefits that are available in this example of using the life insurance. Let's talk now about estate tax and estate tax planning and where we are. The federal estate tax exemption has historically moved around quite a bit. Let's start by reviewing where it stands today. Currently, each individual has an annual exclusion gift of $15,000 that they can give that money to any number of people without impacting their lifetime exemption. 2020 brings us an all-time high in the federal estate tax exemption as well at $11.58 million per person. It reverts back in 2026 to $5.6 million, or it reverts back if there's a change in administration or change in a political party and they change the tax law. Given that the current tax law and the state exemption are going to revert back to roughly where they were half, now is the appropriate time potentially to take advantage of some planning. In addition, 18 states have some form of state estate tax as well. And this is ranging from various state by state. And you can see the little picture on the chart here, giving you the states that do have a state estate tax as well. This obviously can lead to lots of confusion and not knowing what you can do. But what we tell clients is, hey, there's an opportunity for planning right now. And there's an opportunity to do some planning right now that potentially you can do and change your mind down the road, sort of planning with little strings attached to it. So what are the straightforward ones? Use your annual gift exemption. So giving away that money on an annual basis, that $15,000 that you can give away to any individual, doing that, taking advantage of that, doesn't impact your lifetime exemption. Utilize your lifetime exemption. Give away money during your lifetime also gives away future appreciation of that money. But you got challenges to long-term planning, obviously, with the ability to have estate tax changing frequently, amounts changing, state rules differing than the federal rules leads to a lot of confusing. So here's a planning idea with low interest rates that we think makes a lot of sense. We had a client, male, age 55. He had 3 daughters from his first marriage. He wanted to provide each of his daughters a $5 million inheritance. He had a net worth of $25 million. And he wanted the remainder of his estate to go to his current wife or charity. He understands the current lifetime exemption sunsets to that $5 million number that we just talked about in 2026. So the solution, the client in this instance creates an irrevocable life insurance trust. The client then loans that ILET $5.7 million using the mid-term applicable federal rate, the AFR rate that's published monthly by the government that says this is what you need to charge to inter-family member loan to make it a legitimate loan. So the government publishes this table. Today it's at 0.35%. So when you loan money to a trust or related parties, this is what the government says you must charge to make it a legitimate loan. So we've got a 0.35% rate currently. The ILET's income from the loaned assets would be used to make an annual interest payment back to the client. So once this ILET is created and the client loans the ILET money, the ILET owes interest back to the client. So 35 basis points or 0.35% of $5.7 million is a $19,950 annual interest payment. The ILET has this $5.7 million in it, so it purchases a $15 million life insurance policy on the father, our client in this example, ensuring that each daughter will get that $5 million of death benefit. Why does it work? Well, it works because at any point between now and 2025, the sunset year, or prior to the law changing, the client has the ability to forgive the loan to the ILET, thus making it a gift based on current gift exempted amount, which again, we only put 5.7 million in, we didn't put all of it in. But if the client decides, hey, I don't want to forgive this loan, I want my $5.7 million back, the ILET will repay the value of the entire gift in year 10, and the life insurance policy will remain in the trust for the benefit of the 3 daughters. This is a strategy that gives us the ultimate flexibility. You're loaning money now with deciding, do I want to forgive this note some point in the future? Or do I want that money given back to me because I need it for whatever reason? It gives lots of flexibility. Clients love flexibility. This is the time and where our current estate tax laws are to give flexibility. And this is showing an example of 5.7. Doesn't mean we have to use 5.7 million. We can use any number up to the exemption amount because we don't know what's going to happen with the estate tax in the future. We have no idea, is it going to go down back to where it was at one point at $600,000? Is it going to stay where it is? We just know that it's likely going to change. So here's an example. A client creates an ILET. Client loans to the ILET, the irrevocable life insurance trust, the 5.7. Now the ILET owes an interest payment back to the client for borrowing this funds. They buy a $15 million life insurance, which then is paid at the client's death to his beneficiaries, in this example, his 3 daughters of $5 million each. And he has lots of flexibility to forgive this loan, to get all of his money back that he lent to him at some point in the future. Great tool, great planning tool today. So next steps in leveraging today's low interest rates. We've got mortgage rates, contacting lender, refinancing business loans, student loans, contacting bank, premium finance life insurance, contact us for a specific analysis and example for you. We can show you that. Estate planning, contact us and we'll discuss with your attorney or help you find an attorney to help with the estate planning discussion. Thank you. I appreciate it.
OJM is a multidisciplinary wealth management firm, and we have worked with over 1,500 physicians, businesses, and individual investors throughout the country. We would welcome the opportunity to speak with you about how we might be able to bring value to your wealth planning. OJM partners have authored several books, all of which are available to webinar viewers at no charge. You can get a free print copy or ebook download by texting OJMWeb to 47177. You can also visit ojmbookstore.com and enter OJMWeb at checkout. In addition to a free book, OJM Group also offers webinar viewers a complimentary consultation where we can answer your questions and see if our firm might be a good fit for your situation. Visit ojmgroup.com or call 877-656-4362 to schedule your free consultation. Enjoy the free copies of our books, and we hope to have the opportunity to speak with you. Thanks for watching.